Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar experienced another volatile session on Thursday after key events including the Australian CPI data and the Federal Reserve rate decision pressured the support level at 64.75, which is still intact. The recent weakness was amplified by Thursday's data, which raised fears that the US Federal Reserve might delay rate cuts to avoid a recession. However, the US ISM manufacturing index fell to its lowest level since November. With markets reacting to a soft economic data, Friday's job report, the non-farm payrolls, is seen as crucial, as a too cold report might heighten fears of a delayed rate cuts, while a too hot report could raise concerns about September's rate cut. With bullish divergence seen from the RSI and also with the recent hammer that was posted, I do anticipate the market to rebound off the level that is seen at 64.75.85 and rise back towards 65.45 and on towards 65.70.75. But the market will be whipsawed due to the upcoming economic data out of the US, as I mentioned, the non-farm payrolls, and therefore traders should remain cautious and monitor signals closely and adjust risk management accordingly. Turning to the euro, a little bit weaker as it now heads back towards the key support level seen at 107.65.70. I like the way the market's actually holding here, so I do anticipate a bounce from this level and look on towards 108.55 and then 109.05.25 to reassess. Viewing the weekly chart for dollar yen, the market still pressures this key support or the broad trend level, which is seen at 148.15.55. Now a break there could give significant downturn, head into this recent nosedive and look towards the level of 142.60 where I've outlined here and reassess. With the upside likely to be limited, I view resistance around 150.45.15. Super Thursday brought no surprises from the UK Central Bank as the Bank of England, as widely expected, cut interest rates for the first time since early 2020. The Bank of England Governor Andrew Bailey warned against rapid or excessive rate cuts to keep inflation low. He also noted that the UK services inflation might rise slightly in August but should ease later in the year. With the support level now taken out of 127.45, could see further risk to the downside and look towards the lower side of the range of 126.30.75 before the market bounces due to the fact that the ADX is trending to a bear case and the indicators are married up as well. Gold has recovered after a whipsaw price action and still expected to reach its objective around 2,500 since the break of 2,400. Given the fact that the technicals are all firmed up to the bullish case, should limit the downside with the support seen around 2,044 and an expected base that is from 2,432 to 34. The immediate resistance seen around 2,462 to 66 and as I mentioned should see an extension on if breached to 2,500 where I feel reassessment will be necessary around that region. Wrapping up with oil, it looks like we're heading into the fourth weekly losses after the recent up test failed to take on the challenge around 78.45.70 and now is backed away and looking towards the support region of 75.80, which could lead down towards 74.70.75 before seeing another bounce. Overall, the market is likely to be whipsawed and remain range bound as it attempts to try and find a trend where at the moment it's just market noise. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.